Dean, good morning. Thanks for having this time with us.
Good morning.
We could see as Europe in the second quarter has the same feeling about the growth. North with Germany, south with Spain, Italy, Portugal has the recovery is more close to see. How you could see the growth in this second quarter?
So I think following the recession or contraction that we saw in the first quarter, which it has to be emphasised was much less than most people were expecting, given the restrictions that we've seen across the Eurozone. My sense is that the second quarter we should see a pretty broad-based improvement. Certainly the lead indicators are suggesting that growth can pick up quite smartly in the second quarter, but that strength will build as we go through 2021. So what I'm actually expecting to see is that a return to positive growth in the current quarter, and that accelerates further as we go through 2021, as restrictions are eased and as economic activity normalizes.
What's your point of view about inflation and interest rates?
Yeah, so this is clearly the largest debate that's taking place in the markets at the moment. My sense is that a lot of the concern around inflation is overblown. It was interesting that last night we had three speakers from the US Federal Reserve all making the point that inflationary pressures are transitory and therefore not a concern for central bankers at this stage. Now, what that means in terms of interest rates is that it's very unlikely that central banks will need to tighten interest rates anytime soon. I believe we're going to see some tweaks to quantitative easing programs, but this isn't a very clear signal that the period of low interest rates is coming to an end. We have to accept that a low interest rate world is going to be with us for some time yet.
We could see the end of the QE in United States and Europe now?
I think, again, it's a little bit premature to be talking about the end of QE. Certainly, we may see some tweaks. If we look at Europe, is it likely that the European Central Bank at its June meeting decides that its accelerated rate of asset purchases could be slowed a little? Yeah, I think that's fair. We may hear the same today from the Bank of England. But, we shouldn't lose sight of the fact that quantitative easing programs are still going to remain in place for some time, and we would have to see those come to an end before we even get to the conversation about what's going to happen with interest rates.
And mobility could be restored in the next couple of weeks, and economy could be boosted with this change?
Yeah, absolutely. Certainly there's progress being made here, and this is particularly important for the southern European economies, or those economies that have a trade surplus in tourism, for want of a better term. There's a lot still of uncertainties here. Europe, if Europe opens up, then internal mobility within the European Union will clearly improve the situation for tourism. I think the jury is still out, quite frankly, in terms of what it means for external countries to the European Union. The reason for that is a lot will depend on what national governments decide is their approach on visitors returning from Europe. But there will be nuances, but unquestionably the news flow here is heading in the right direction.
Where the investor could be these opportunities in the market, in your point of view?
So overall, we're still constructive on the outlook for the global economy and therefore for risk assets. So, within our tactical asset allocation, we still have a most preferred position within equity markets. I think a couple of key themes that I would highlight to you. The first is that one of our ideas is that we should be positioning for reflation. That in itself is something that supports a most preferred position. financial stocks, oil stocks, energy stocks in the US in particular, as well as commodities in general. And I think the other thing as well is that we still think there's plenty of opportunities in Asia. Asia's quite early in this recovery cycle. So with that in mind, we currently have a most preferred recommendation on emerging market stocks as well.
Thanks for having this time with us. The Internet, Chief Eurozone and UK Economist at UBS Global Wealth Management, Chief Investment Office. Good day, good business.
Good day. Thank you very much.